is good? We will be breaking down this SPX500 long breakdown that I did, breakdown and also trade that I called in the chat, and we'll be breaking down why I took that and what my thought process was behind that. So, to start off, we will be using the replay tool on this to show you how price moved prior to the actual entry. But if you start off by looking, you can see that the last very major liquidity take was a sell side liquidity take. It traded above the swing low. This is a swing high right here. It traded above the swing low and essentially had a market structure shift. And at the market structure shift, it had been bullish ever since, as you can see. So zooming into current price, I did notice that you had price chasing buy side here. At the time, price came up, chased buy side. Didn't quite break structure, but did have a market structure shift, and then came down and did not feel this imbalance, so that wouldn't have been a setup, but we had a continuation from there, according to my trading plan at least. And then price created a high, took out some buy side liquidity right here on this wick right here, and essentially started a retracement. And if you look to the left here, you'll be able to see that this wick up here in this area that I showed you is responsible for trading above some type of swing high, which is buy side liquidity. Let's see, boom. You have three swing highs right here. You have one here, one here, and one here. And if you show where my crosshairs are, they are relatively equal, which means buyers are going to be having buy stops right there above those orders, resting above, which is why they did that. So zooming into current price, I was capitalizing on the bullish trend, and let's use the replay tool now. Quick. At the time, right, price was continuously chasing buy side liquidity, chasing buy side and chasing buy side and chasing buy side over and over and over again. Overall, still bullish, chasing buy side. Eventually, price created the high, which would be a swing high, which would be buy side liquidity. After it took the buy side liquidity mentioned here, you know, market structure shift on 1 hour and traded below this low. So now you know they're chasing sell side. So I had a few ideas for this for my POI. You had a 1 hour imbalance just below this swing low right here that I was considering, and you also had birds love being loud at a particular time of the day. And I also had this last structure break right here on this buy side liquidity on this swing high. So there was a possibility that price was going to come back down to this extreme order block, right? On the 1H. So that was also a possibility. Otherwise, there was this 1H fair value gap. So my gauge on liquidity was at the swing low. I always consider the lowest swing low above my POI when looking for sell side liquidity. I'd rather miss the trade than lose on the trade because I got in just a bit too early. So price was coming down, chasing sell side. We had the market structure shift right there happening, and price came down, and I was patient and kept coming down. And eventually price took the sell side right there. It took the sell side liquidity and made it to my first POI idea. At that time that you seen that wick, zoom in a little bit on price. At the time you seen the wick coming down and taking that sell side liquidity. My goal is to look for a bullish market structure shift on the 1 hour so that I can confirm that this is going to be the POI that their smart money is going to be using in order to continue the bullish trend. Like I said, it could have came down to this 1H order block extreme POI. So with that being said, I'm going to play it forward and show you the market structure shift that ended up happening. So price did end up having a market structure shift right about on this candle right here. There's a little one that traded above this lower high. I wasn't really a big fan of it, to be honest, because of how slight it was. I wanted something more aggressive and energetic. So I did get that on that candle right there. And as you can see, after the market structure shift, price came back down and traded below a swing low and then had a continuation. But I really didn't like that right there. I wanted to wait for more price action. So I did. So I waited for more price action. Price came up and on the energetic run up, that caused the market structure shift. There's an imbalance. This was the fair value gap that I did see at the time, but it wasn't enough because, for me at least, because I wanted more evidence that this was going to continue to buy. So what I did was I drew my Fibonacci from here to here, from wick to wick, And I noticed that it did not even cross below equilibrium. And that's why I did not take this initial entry. Otherwise, this could have been 2 entries. If I would have gotten this imbalance at the 79%, or at 62%, my bad, Fibonacci retracement. But it did not come that far. So I waited for another buy side liquidity take to show me that they were still continuing up, and that they weren't going to come down here and to this last down candle before they break up, which would be a bullish order block. And I had to wait. So possibly at the time, I predicted that they might take out these swing lows too, and then come into my 62 to 79% Fibonacci level, but that did not actually end up happening. So I had to adapt. So at that point, at that time, that price actually, and we'll slow this down just a little bit more. Okay, varied it 3 times. At the time, that price traded above this swing high right here. This is more buy side liquidity right here. This is a swing high on the 1 hour, right? We already had the 1H market structure shift happen, and then we had the bullish price action to back it. Now you're just looking for, because I didn't like this price action, so now I see good price action around the fair value gap and a swing high created right here. But now I need price to trade above that one more time. Price did. Once price traded above that, I did have price coming back down. I did not enter there. I entered in this area on this bullish order block right here, with a market execution actually on this down candle. Price did have a little small amount of drawdown, but then price went up into our favor, and we held this for a 1 to 4. And my stop loss was behind this low right here. Show you. My stop loss was behind this low right here. Why was my stop loss behind the low right there? Because it just recently took out a swing low right here on this 1H sell side liquidity and respected this 1H order block right here. You can see this last down candle right here in premium, my bad, discount territory. It respected that. On top of that, if you drop down to your 15-minute time frame, you also had a 15-minute order block, which would have been the last down candle once again before the move up that took liquidity. So this was the last down candle. Price came and respected that. You could have put a limit order there for a snapper entry, but on the buy side, but I did end up missing that, and that's why I took this one. I knew that this was going to be considered a strong low because it recently took liquidity, and it's not to be broken. So same thing with this. This is a strong low, and you can see that these wicks were never violated, and neither was this wick at any time. Each time price takes liquidity and leaves a wick or a low, like I did here, took out these lows, and right here took out this low. It's going to be a strong low. So we have real quick strong low right here, and also price continued after that, and there was a strong low right there. There are a few more factors that I ended up using in my strategy in order to catch this trade. We had Asian session, and you can see right here that the orange is the middle, the top is Asian session highs, and the top down blue is the Asian session lows. So we had Asian session lows taken as well, right into this 15-minute order block. So that's more confluence in context for the trade. We did have also a bullish fractal at the 15-minute order block and at the 1H order block. It's confirmation, and then we had actual New York kill zone confirmations as well for that, as well, on top of the price action and fundamentals that we had. So I bought right here, knowing that at best that price would come down and tap this order block, and we'd have maybe a 0.25% of drawdown before price went into our favor. So going out real quick, and we were targeting once again the buy side that was created right here, because if this is the overall bullish trend, price is going to continue to chase the swing highs overall for the trend. So I targeted that for 1 to 4, and you can see how the trade worked out. We ended up smashing TP in about 9 hours to the pip, and that is NASDAQ breakdown. So obviously after the swing high is taken out, they have to chase a swing low. So price is going to come and take out some swing lows. This would have been the opportunity to sell right here in this area. I did not sell, but I just have the risk to reward ratio here for an example. This would have been an opportunity to sell right here in this area. After a buy side is taken, they have to chase sell side, and also in order to stop out those buyers there, they have to push price down. So there would be banks offloading long orders here and then onloading sell orders here in this area after they take the buy side. So you can wait for some price and confirmations in order to get in on the short, and this would be a temporary weak high because it's an overall bullish trend. So at the end of the day, you could ride this down, but also with the expectation that this is going to be taken so long at some point, because it's another once again swing high, so long as this SPX stays bullish, that this is going to be another area of buy side that banks will be targeting after they take the next level of sell side, right? So you can kind of follow the trend and follow the liquidity and be able to predict where things are going from there. So, and pair that up with order blocks, kill zones, Asian session, fractals, whatever you want to pair with for your own strategy, right? So in this case, I would expect a short-term low to be taken out in order to post a continuation. So that's SPX500, and this is 1H sell side liquidity here. I like to mark all of my liquidity in case it is ever taken in the future. I know that that's an opportunity to go long here, and I know that this was an opportunity to go short here. Also, another opportunity to go short here, because once again, when they take buyers out, they have to sell off in order to stop those guys out, and vice versa. So look to the swing highs and lows for your opportunities. If you want more breakdowns like this, go ahead and drop a like and subscribe. If you got value out of this video, go ahead and drop a like and subscribe.